Hello everyone and welcome to today's video. Today is day 41 of our 365 days challenge. I'm Archana Pingade, your go-to guide for all things in finance. Today we are diving into the intricacies of Income Tax Act, especially focusing on section 10. Now, I know tax related topics can be a bit overwhelming, but don't worry. So, grab your notebooks and get ready to understand the mysteries of Section 10 exemptions in income tax for the financial year 23-24. So, Section 10 of the Income Tax Act is like a treasure chest of exemption. It's like the government is saying, hey, we understand life can be tough, and so here are some breaks for you. What are those exemptions? Well, they are specific sources of income that are exempt from tax. Stick around till the end of the practical tips on how you can leverage these exemptions for smarter tax planning. And we will also address common issues faced by Indian investors. So, Section 10.1 Agriculture Income. Let's kick things off with the Section 10.1, which deals with agricultural income. In simple terms, income generated from agricultural activities is exempt from income tax. So, if you are an individual engaged in agriculture, then it's good. Your hard work is tax free. Now, on to section 10.2a, which is gratuity. Gratuity received by employees is exempt up to a certain limit. This is a great relief for employees who have completed at least 5 years of continuous service with an employer. It's like an financial thank you for your dedication by your employer. So, moving on to section 10.2, which is house rent allowance, HRA. If you are a salaried individual receiving HRA, you can claim exemptions based on certain conditions. This is particularly useful for those living in rented accommodations, providing some relief for the rent paid. Section 10.5, which covers LTA, that is leave travel allowance. This exemption allows you to claim expenses incurred on domestic travel during your leave. So if you're planning a getaway, a vacation, this is a perk you wouldn't want to miss. So let's talk about section 1010D, life insurance proceeds. If you receive the sum assured or bonus under a life insurance policy, it's tax free. This is a crucial aspect to consider when planning for your life insurance investments. Section 1011 comes into the play when it comes to the income from minor's asset. If you're managing investments on behalf of a minor, the income generated might be exempt from tax. It's a helpful provision for parents or guardians. Section 1010BC, it addresses specified business income. If you are involved in certain specified businesses, the income derived from them might be eligible for tax exemptions. This is an excellent avenue for those engaged in specific businesses or the special business activities. So, finally, education allowance, section 1014. If you have children, their education expenses can be exempt. School fees, hostel fees, all are covered. Education just got a bit lighter on the pocket. Now that we have covered the key sections, let's discuss how you can leverage these exemptions for smarter tax planning. First one is diversify investments. Spread your investments across various sections to maximize exemptions. For instance, combining HRA, LTA, and agricultural income exemptions can significantly reduce your tax liability. Second point is understand the limits. Beware of the limits specified in each section. Exceeding these limits may result in additional tax liabilities. Stay informed to make the most of the exemptions available to you. Third one, utilize family benefits. Explore exemptions applicable to family members. For instance, if you are managing assets on behalf of a minor, consider the provisions under section 1011. Fourth, Review life insurance policies. Regularly review your life insurance policies. Understanding the tax implication of the proceeds under Section 1010D can help you make informed decisions. 5. Professional advice. It is must. If in doubt, consult a tax professional. They can provide personalized guidance based on your unique financial situation. 6. Stay updated. You know that income tax laws keep evolving. Keep an eye on updates from on section 10. What is exempt today might not be tomorrow and vice versa. 7th, proactive planning. Plan ahead of time to make the most of these exemptions. Waiting until the last minute might cost you some potential savings. 8th, avoiding double dipping. Be cautious not to claim the same expense under multiple exemptions. The taxman doesn't appreciate double dipping. Ninth, deadline awareness. So, some exemptions have specific time limits, specific time frames, or deadlines. Missing them might mean missing out on the savings. 10th, applicability check. Now, you have to basically check whether these exemption is applicable in your specific situation. Just because it exists doesn't mean it applies to everyone. Despite the benefits, there are common issues that taxpayers may face. So let's address a few. First one, documentation error. Ensure that all necessary documents such as rent receipts, travel bills, or insurance documents are accurate and readily available. Documentation errors can lead to complications during tax assessment. Also, remember that misinterpretation of rules can cost you some amount. Understand the specific conditions and criteria for each exemption. Misinterpreting the rules might lead to incorrect claims and resulting in tax related issues for you. Also, remember failure to plan ahead. Effective tax planning requires foresight. Failing to plan ahead can result in missed opportunities for exemptions and increased tax liabilities. And there you have it, a simplified overview of Income Tax Act Section 10 and how you can leverage for smarter tax planning. Remember, staying informed and planning ahead are key to making the most of these provisions. Thank you for joining me today for this live. And remember, understanding your tax exemption is like having a superpower in the financial world. If you found this video helpful, don't forget to like and subscribe for more informative content. Until next time, stay financially sharp and take care. Bye bye. See you tomorrow.